Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of December 11th through December 15th, where we'll try to see if the FOMC is going to be Santa or Scrooge this year when they make their Fed interest rate decision this week. So we'll see if they bring us gifts for this Christmas or if they're going to be Scrooge or Grinch and steal our Christmas. So let's get started. Thank you for everyone that's joining us in the chat. Brian Moritz, Easy Mike, Walter Lyons. Thank you all for joining us. Would someone in the chat give me a thumbs up if our sound is okay? I was having some sound issues earlier. If I could get a thumbs up, if our sound is okay in the chat, welcome EKS. That would be very helpful. Good. Thank you, Walter. I appreciate it. That helps. So here's our Google document with our notes for the trading week of December 11th through December 15th. We keep our notes in publicly accessible Google documents. You can find a direct link to this Google document with our notes for part one in the description box below. Our notes contain links to bonus videos, links to all the tools and resources that we use to do our market analysis, come up with our strategies, trade ideas for part one of our weekly trading game plan. We keep all of the Google documents with our notes in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weeks, and you can find a direct link to that Google Drive folder also in the description box below. Welcome Sydney Osborne, EKS, Brian Moritz. Thank you all for joining us today. So first we'll take a look at how the markets ended up on Friday. I'll go to the main page in FinViz. So we can see pretty flat in the morning. Then we had a run up in all the indices towards the end of the day. So they ended up slightly positive. We had about 57% advancing, 38% declining, 80% new highs, 20% new lows, 75% above their 50-day moving average, 24% below, and we've got 58% above their 200-day moving average and 42% below. And we can see it was a rotation back into the Magnificent Seven, back into the mega cap techs. One of the themes that I've seen during this week is we're getting rotations in and out of the Magnificent Seven. So we'll have a day where they'll rotate into the Magnificent Seven, then the next day or so they'll rotate back out, rotate back into small caps, into the Russell, and we'll see that in each of the indices. So generally pretty green, pretty positive. See, NVIDIA had a large run up. Some of the news: power outage in Sri Lanka. Pessimistic consumers are feeling better. It's a rally. New highs for 2023 on Friday. So S&P got a new high. We'll see that. We saw oil briefly break below 70 this week and then bounce back up off that 70. So we'll see again in the futures that 70 seems to be a pretty stable support area, pretty stable floor. And we'll talk about some of the things that are going on with oil. Natural gas really broke down to 250 or so. And again, it seems like the support area, the floor in natural gas is around 250. Saw a steep decline in gold as well. It dropped down to almost 210 or so. We'll see the steep decline in the futures in gold, silver, etc. And again, I think we might see a drop down to that support level in gold of about 2,000. So again, we'll see that in the futures as well. Welcome, Ricky Khan. Thank you also for joining us. DXY, the dollar, has been hovering around 103, 104. So we see that oscillation in the foreign currencies. The yen had strengthened some, and then it just recently weakened again. We had seen the treasuries down in the 4.1%. earlier in the week, and we'll see some of the economic data that came out before the jobs report came out on Friday. And when the jobs report came out on Friday, Treasury yields bounced back up into the 4.2s, have a slight inversion. So again, we'll see in the jobs data is a little bit stronger than expected. So we're getting a readjustment in the Fed interest rate and therefore the Treasury rates as well. So we'll look at each of the indices real quick. So we'll see the SPY made a new high. It's running up pretty steadily, although it looks like it's consolidating along that high. Just eked out a new high on Friday. So again, we see that previous high in July. It still has some room to reach a new all-time high. So again, we may see some resistance, some consolidation along that previous high until we get a further breakout. Got the Qs. Again, the Qs very similar. It made a new high recently, broke that previous high from July. It's got room to go for an all-time high, but again, we're seeing some consolidation. We had a doji previous week, and then this week engulfing bar, so that's bullish. We've got room above the moving averages. The longer term moving average continues to move up, so bullish, but again, we might see some flat choppy action going on until the end of the year. When we get the Santa rally, we might get a push upward. Similarly, on the Dow, we saw that really strong run in the Dow and then some consolidation this week. So kind of a broad doji here. It's got a little bit of room to reach its previous all-time high. So again, we'd probably see some consolidation, some pushes up, some retracement to establish that new high. Russell IWM, again, we've been seeing this rotation in and out. It's had a nice run. Again, we've been talking about the seasonal positive bullishness for the Russell. So it's now, above its moving averages. It's still got plenty of room to run to test its previous high. So again, we might see when we get some risk on days and or the rotation out of the Magnificent Seven into the Russell, we could see some further pushes up in the Russell. The VIX, again, been very muted, even with some of the volatility with the economic data. You can see the VIX is down. I think the actual VIX is down below 13. So it's just really dropped off. After we got out of October, the VIX has just really declined, and there really isn't a whole lot. We might get some volatility around the Fed interest rate decision if they happen to come out and Scrooge us, but I don't expect that to occur. So we might get a little bit of volatility, but I really don't expect the VIX to pop up anytime soon. So we'll look at the groups and the sectors. So again, sector rotation. On Friday, we saw a rotation back into energy. Again, energy had been severely beaten down when oil declined, below 70. And then we got this, risk on with technology, rotation into the Magnificent Seven and technology. So your risk off sectors, were in decline. Utilities, defenses were in decline. Real estate a little bit in decline with the Treasury yields perking up a little bit. Again, for the week, pretty much risk on, technology, communication services, and again, energy severely beaten up, basic materials and defensive. So again, we'll see this rotation out of or back into energy, I expect, for the month. Real estate's been strong, technology, materials, again, energy, the only weakness. Again, energy weak for the quarter, technology strong. Real estate's kind of slightly positive, and then we'll look at the half year when we get more towards the end of December. So the industry-wide, again, uranium's been very strong, continues to be strong. So, hovering, the uranium stocks are hovering around their resistance, but generally trending upwards. Saw some basic materials recover. Again, oil slightly recovered on Friday. Weakest sectors, again, silver, gold. Again, we saw that severe, they peaked up. Gold hit a new all-time high and then quickly retraced, got rejected. It's been downtrending since. Silver similarly, but not quite as dramatic of a decrease. See, some of the REITs had been positive and they rotated back out with the Treasury bond increase again. For the week, real estate somewhat positive. And the most negative are going to be oil, energy, silver, gold, solar, so energy, silver, gold, some other basic materials, etc. Some of the REITs. For the month, though, silver's been strong. Energy's relatively strong. Coal was strong. And the weakest for the month was oil. So again, we're seeing that bounce up in oil. And again, we'll talk about some of the catalysts, potential catalysts in oil. Okay, I'll bring up the economic calendar at investing.com, talk about some of the highlights from this week, and then we'll look at the economic data coming out next week. Let me grab a quick drink and then we'll continue. Okay, the only real notes that I took this week was when the jobs data came out on Friday. Again, we had seen Treasury yields were dropping down. They were, the chance of a Fed cut or a Fed hike was minimal, and they had priced in Fed hikes, and we'll see that when we look at the probability of a Fed hike this week, as well as Fed cuts in the futures, and see how those percentages have adjusted. But then when we got the jobs data, it was stronger than expected. We see non-farm payrolls was 199 new jobs versus 180 expected. Participation rate eked up a little bit. Average hourly earnings pretty steady, but month on month it was higher than expected. So that's potentially inflationary. See, the unemployment rate actually dropped. So again, all of this says, as we've been saying, is the job market is resilient, continues to be resilient. And again, the unemployment actually dropped. Now, some of that may have been the UAW strike, people returning. Some of it may be seasonal workers being hired for the holidays. So we'll have to see if that continues. But again, job market's resilient. Fed doesn't have to worry about unemployment skyrocketing. So, they can continue their fight against inflation. And again, this hourly wage or our average hourly earnings being higher than expected is potentially inflationary, might be concerning. We also got the Michigan sentiment, but that was relatively positive. The consumers' inflation expectations dropped quite a bit, down to the 3%. The 5-year inflation dropped again below 3%, and their sentiment expectations were more positive than expected. So the consumers feeling a little bit better. Their expectations for inflation has lowered. So it says, the Fed is potentially, winning their war against inflation, at least in the consumer's eyes. So that's all positive. So even though we saw, the bond yields perk up a little bit, they unraveled some of the Fed interest rate cuts that people were speculating on in 24. The markets eventually were positive for the day. So we'll take a look at some of the other economic data from last week, and then we'll see what's coming up next week. Thank you for sharing that news with us on oil. EKS says so far they bought 9 million barrels of oil, average price of 75. They're buying 4 million more. That was one of the catalysts we'll talk about when we get to the futures and talk about oil. One of them is the refilling of the SPR. And again, we'll talk about some other potential catalysts for the rebound in oil as well. So some other economic data from this week. Got factory orders weaker than expected, not terribly surprising. Bond auctions were decent. ISM non-manufacturing pretty much in line, maybe a little bit of weakness, but pretty much in line. We also got this JOLTS data, so that's job openings decreased, so the job market may be coming a little bit more in balance, and that's a positive from Powell's perspective. Got crude oil stocks. We're slightly positive, expected to be negative. Again, we saw that decline in oil down below 70 and then rebound. Mortgage rates had dropped down. They'll probably rebound again with bond yields with the 10-year going back up. We got non-farm employee ADP numbers was below expectations. So we got ADP first, and then we got the actual employment data. So we've got all these OPEC. Unit labor costs dropped, so that's positive. Again, we saw crude oil inventories drop significantly. That should have buoyed the price of oil back up. I don't think that really had much of an effect at that particular time, but we are seeing that rebound. Got job cuts were bigger than expected, so more layoffs. But again, on the actual data we got said the unemployment rate dropped. Natural gas storage dropped more than expected. So again, that should have caused an increase in price. Didn't really. It's still down around the 250s. So we talked about the jobs data on Friday, the unemployment rate, consumer expectations, rig count decreased. So again, and although the overall total rig count increased slightly, the oil rig count decreased again, so slightly less supply. So again, that should at least help stabilize the price, if not push oil prices back up. So data for next week, got some bond auctions. We've got CPI on Tuesday, got PPI on Wednesday, and then we've got the Fed interest rate decision coming on Wednesday afternoon. So as we'll see, we get their decision at 1 o'clock. We get projections going forward. So we'll see if they change what they call their dot plot for inflation going forward. Then we'll get their actual statement. You can see the expectation is no rate hike, so that would be considered, gift to Santa perspective from the Fed. No rate hike. If they do hike, then that would Scrooge the market pretty severely. Then at 2:30, we've got Powell coming out doing his press conference, and people will be listening for any changes. Are they still very concerned about inflation? What do they think of the job market? Do they think they're winning their battle against inflation? I don't expect them to change anything. They're going to stick to their 2% target. They're going to be data dependent. They're going to be willing to raise if necessary. I expect to hear all those. Typically, just a quick reminder, None of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. So then Thursday, we get some jobs data, some retail sales. So that'll be interesting for November. See if Black Friday was positive for the retailers. Get natural gas storage, typical. Get some industrial data on Friday. So Tuesday, Wednesday, Thursday, or Tuesday, Wednesday, probably going to be the most volatile since we get CPI, then PPI, and then we get the Fed interest rate decision. So markets may be waiting a little bit on Monday to see that data, and then again waiting for the actual interest rate decision to make a move. Again, if we get the hold, I think that'll be viewed as very positive, that the FOMC is going to be Santa this year, give us that gift, and I think the markets will rally the rest of the week. So again, my opinion. Good morning, Gerald Fritz, MD. Thank you all for joining us. Hope you all are doing well. So again, Tuesday we get CPI, Wednesday we get PPI, and then in the afternoon we get the Fed interest rate decisions. Then Thursday, jobless claims, retail sales. And then we won't, have any further Fed action for the rest of the year. We'll start talking about a Santa Claus rally, etc., going into next year. So again, if the Fed holds, in my humble opinion, that'll be very positive. A Santa FOMC being Santa this year, and I think we'll see a decent Santa Claus rally at the end of the year. Should be winding up pretty much in the earnings. So again, you can view the earnings calendar. I know Oracle is, I believe, reporting after market tomorrow. So if they were to disappoint, that may impact some of the Magnificent Seven, the cloud providers. So that may have some impact. I'm not offhand, don't know of anyone else that's significant. So you can view the whole calendar in investing.com. I think Oracle is going to be the main one that may impact the market. Okay, so let me grab a drink and we'll jump over to the market screen in Webull. Okay, this is the market screen from the online browser version of Webull. It looks like they're doing some work. Looks like they've changed some of the format and enlarged the fonts on the browser version. So slight changes. Hopefully it's a little more legible. We see in the histogram, again, we had more advancers than decliners, about 3 to 2. Percent of advancement was pretty small, a lot of unchanged, very few dramatic decliners or advancers. As we've seen for several weeks, on Friday, we see this outflow out of the NASDAQ, inflow into the NYSE. So we've seen this trend now for several weeks. And even though the NASDAQ, increases, it's mostly a rotation into the Magnificent Seven. And again, we saw that yesterday. So again, you can see the earnings calendar, the near-term earnings calendar here in the calendar section in the online browser version of Webull. Again, we see Oracle coming up, Bluebird. I think that's the bus company and not the bio. So again, you can go through and see the very near-term earnings calendar here in Webull as well. Look at the best performing industries, and again, they've changed this format a little bit. So we expand the screen, again, a little bit bigger. So best performing industries, again, uranium's been strong, financial about mixed, home building positive, oil and gas, again, a slight rebound on Friday. Let's look at it for the week. So home building, so they're sorting it now. It looks like most positive, so they're sorting it by the most positive, so that's a little helpful. So we see home buildings the most positive. Semiconductors a little mixed. Software slightly positive. Real estate, again, uranium for the week was pretty split. So again, now we can see in Webull, the most to least positive for the week. So I kind of like that. You can tell me what you think of that. I think that's a little helpful. Look at the most popular ETFs. So we'll look at the markets first. So the most popular, that's small caps. TNA is small caps, up on the Russell, up on the Dow, up on the S&P, up on the NASDAQ. So TQQQ, so leverage up on the NASDAQ. Again, down on the VIX. Again, small caps up on the Russell. Industries, so industrials, financial services, communication, energy, again from Friday, real estate, defensive a little negative, basic materials a little negative, technology very positive. So oil, again, a rebound in oil. So another trick I saw, since it's harder to read the names of the ETFs now in this screen, is if you happen to want to look at one in more detail, you can just double click on it here. It'll jump to the stock screen for that particular ETF, so we can see that's a currency. And then if you want to expand the quote for that particular ETF or stock, so that's the Canadian dollar. So again, just a little bit change in the navigation, how to navigate the market screen and identify various ETFs, etc. So that was from the Forex. So I hope that all helps. Tell me what you think of their enhancements to the market screen in Webull if you like that. We'll talk at some point about another option to look at that data that I've also discovered. We'll look at the futures in FinViz. So we see all of the indices, pumped up to a new high. Looks like, consolidating along that new high. So again, kind of choppy. Again, I expect, similar chop along that top, along that high, resistance at that high. So again, I think we'll get some choppiness at least up till the Fed interest rate decision. Then if we get a FOMC playing Santa, giving us what we expect, if they sound more dovish, I think we'll see a rally in the indices. Again, same thing with the Russell, and we see kind of this in and rotation in and out of the Russell. They'll rotate into the Magnificent Seven one day, and then the next day they'll rotate out of the Magnificent Seven and into the Russell, and then the next day they'll rotate out of the Russell and into the Magnificent Seven, and rinse and repeat. So again, plenty of ways you can make money playing that rotation and watching for it. The European market's been very strong, so you can see the Euro stocks is just running straight up, the DAX running straight up, Nikkei rolled over with strengthening yen. See that steep decline in the VIX. Again, we see oil, briefly broke below 70 and bounced. We went long on oil when it declined, and we'll talk about this, look at it in more detail tomorrow. But we went long on oil using USOI, which is a monthly dividend paying ETN on oil. So when it broke below 70, we went long on oil using USOI. We can look at that in the ETF Google Sheet as well as the dividend payers tomorrow. So we'll be collecting a monthly dividend, waiting for oil to rebound. Again, EKS, I think, pointed out they're refilling the SPR, so that's one catalyst. There's also a conflict between Venezuela and Uruguay in South America, and there's talks of curtailing Biden alleviated some of the sanctions against Venezuela, allowing them to deliver oil. And there's talk about retracting some of that given their conflict with Uruguay. So that's another potential catalyst. And then another is the OPEC members are pushing their membership to adhere to the voluntary cuts that they had. They didn't come out with mandatory cuts, but they're encouraging their membership to adhere to the voluntary cuts, and then they're also talking about further cuts. So, number of potential catalysts that would give us a rebound in oil, and again, we'll see if that occurs. In the meanwhile, we'll collect our monthly dividends. So again, we saw a breakdown in natural gas. Similarly, weakness in the XLE and energy. It looks like there's support around 250 or so. It could drop 240, 250. I expect we'll see the switch in rotation, particularly if we get colder weather. Again, we saw gold, when it made that new all-time high, got rejected, sentiment shift, and it declined down, filled. Last week we talked that we kind of expected a retracement and a gap fill. We've now got that gap fill on both gold and silver. Again, that 2000 level should provide some pretty good support, but it wouldn't surprise me to see further retracement down to about that 2000 level before we get a bounce. Similarly with silver, we got that retracement, gap fill, dropped all the way down, into the 23s. So somewhere in there, we see the previous highs probably provide some support. It could drop down all the way into the, low 20s, 21s. But I think we'll get some support at there, and we'll get a bounce in all those like we got copper there. Palladium, similar. Corn's been, ran up, it's been consolidating pretty flat. We see that steep run up in wheat, peaked out, started to roll over. So it looks like it's consolidating along that top. We are now out of our wheat WEAT ETF. So when it rolled over, as you'll see tomorrow, we took profits on our WEAT, and we'll play that again if we get a retracement. I would expect, with that kind of dramatic run up, I would expect some retracement, some consolidation. Then we'll see if it swings back up. Saw this dramatic drop off in sugar, although we have an ETF to long sugar cane, CANE. As we'll see, the risk reward profile isn't all that attractive right now, but dramatic drop off in sugar. So I guess that global shortage wasn't as severe as originally reported. So again, we saw the bonds were running up, and we got that employment data. They rolled over. So again, now the yields are going up, prices going down. I would expect that to continue at least through the Fed interest rate decision. So again, reversal in bond yields, bond prices. It's more slight strengthening of the dollar. It's been, between 103, 104. And we saw, the yen had strengthened and slight retracement. So I hope that all helps. Okay, I want to skip forward. If we have time, we'll come back and look at the ETFs. I do have quite a bit of updates on ETFs, etc., but I want to get to our main strategy, look at the probability of a Fed rate hike, Fed rate cuts in the future. So let me grab a quick drink, and we'll look at the Fed rate monitor tool, the CME Fed Watch tool, and again look at the probabilities of a Fed rate hike this week, and also going forward hikes and or cuts in the future. Okay, so you can access these tools via the links in our notes. We also have a couple videos about how to use the Fed Rate Monitor tool as well as the Fed Watch tool. You can also find these tools at any time on our homepage under the links section. So if you go to our homepage, beachbumtrading.com, at any time, these particular tools are under the reference link, so you can see the CME FedWatch tool, so I'll bring that one up. And then also the Fed Rate Monitor tool. So we'll look at the Fed Rate Monitor tool first. So this is also on investing.com, so you can also find it there. So you see the countdown to the Fed interest rate decision. December 13th at 1, we'll get the actual decision. You can see right now the probability of holding, no raise, is 97%. Got about a 3% chance of a raise. So again, the market's been expecting the Fed to hold, and that would be perceived as, a Santa giving us a present. Again, they're more dovish in their comments. So if we go forward a little bit into January, we're still on hold, 93% hold, got a 4% cut, 3% raise. Go out to March, again, 50% hold. We've got a 43% cut. So the probability, they adjusted the probability of the first cut, I think, down a little bit. We'll see another graph. We can see the history of these probabilities. So, but 43% chance to cut in March. May, we've got a 50% chance of cut. So the market is currently pricing in a Fed rate cut in either March or May. We're not quite over 50%. But by June, we're definitely more than 50%. They would have at least one cut, if not two cuts. So 42% say at least two cuts. So let's look at the change in probability. You can look at how it's changed. So it was 54% before we got the jobs data, then it went down to 43%, and a week ago it was 55%. So again, that jobs data had an impact on when the market expected the Fed to start cutting. Now it's, pushed it out a little bit. Again, because the potential inflation is wage inflation might be a little higher than they want, and also the job market continues to be resilient, so they can be aggressive with their rate hikes. So they didn't push up the probability of a rate increase very much, but they did adjust down the probability of a rate cut and push that out a little bit. So we'll also look at the CME FedWatch tool. Another way you can view these probabilities of slightly similar but slightly different data. So again, we've got a countdown clock. We've got, again, 97% chance they're going to hold, very small 3% chance they're going to raise. If we go out to January, again, 93% they're going to hold, small percent raise, small percent cut. Now again, March, we got that 43%. We got 53% hold, 43% cut. And then again, May, it's almost a 50% chance they cut once, 26% chance they cut a half point or twice, and 22% chance they're going to hold. So again, no rate hikes priced in, and we've got, cuts priced in. So here they are pricing in 3 rate cuts by June. So I think, my humble opinion, again, not financial advice, but I think these the market pricing in all these cuts is very overly optimistic. I could say delusional. The Fed's told us they're going to hold rates higher for longer, and I don't think they're going to be cutting. I don't think they're going to be cutting in 24. We don't have any signs really of a recession. GDP's been strong, the job market's strong. I know some people are speculating there's going to be a recession. Again, my personal opinion, I don't think we're going to have a recession, whether you call that a soft landing or what. Again, with the job market staying resilient, the economy, the GDP's fine. They really want to get inflation under control. So, again, my opinion. You all in the chat and in the comments can let me know what you think. But I hope that all helps. And again, these as the data comes out this week, these probabilities will adjust according to how the market, prices in these probabilities. So you can, again, keep an eye on these tools as the data comes out, see how those probabilities change. But again, we expect, the FOMC is going to be Santa this year. They're going to hold. We'll have to, again, listen to Powell's comments, see if they're more dovish. But again, I expect the same story, higher for longer, data dependent. They're willing to raise again if they need to. So if inflation rears its ugly head again, they'll raise interest rates slightly to get to their 2% target. So again, our other strategies, we've been talking about how to make money trading in December. That was our theme from last week. So you can hear our strategies from last week in the separate video via the link here in the notes, also on our BeachBum trading channel. Also, we released the short videos on how the markets typically perform in December and what are the best performing sectors and industries, how to make money trading in December. And then again, going forward, we'll be talking about the Santa Claus rally, so you can hear about what that is, what the time frame is, what does that mean for the markets. We've also been talking about tax loss harvesting. So again, as we get closer to the holidays, to the end of the year, the pressure on big losers is going to be higher until people have taken their tax loss, harvested their tax losses, and then they'll potentially buy those back early next year. And again, if you're not familiar with how that works, what does it mean? How does it work? We have a whole video on tax loss harvesting and how that works. So if you need to benefit from that, or if you can benefit from that, you can hear about that in that video. Again, we do most of our trading in retirement accounts, so this doesn't generally apply to us. And we're not tax attorneys or tax lawyers. If you would like a referral for a tax attorney, how you can take advantage of tax loss harvesting or any other end of year changes. Other things you want to consider is putting money into retirement accounts and taking advantage of those tax advantages, etc. So we use Mark J. Kohler, and you can get a reference to Mark J. Kohler, schedule an appointment, etc. with one of their attorneys via the link in our notes, also under a business resources category on our webpage. So we have other business resources as well. Also, we've got a whole video about the wash sale. You have to, you can't buy back the same security that you're harvesting a tax loss on within 30 days, or you're going to lose the benefit of that tax loss. And you can hear more information about how wash sales work, how to avoid, invalidating your tax loss harvesting via that video. We've also got several coming out on how the stock markets perform in the winter. So December, January, February, we'll be releasing these short videos in the near future as well. And then we'll start talking about, again, the Santa Claus rally and the January effect towards the end of the month, so we can position accordingly and take advantage of those upcoming historical trends. Okay, so I'm going to go back to our ETFs. We've got a few minutes. So if anyone has a particular ETF you want to look at, I'll bring up our ETFs Google Sheet. Just a quick reminder, if you'd like access to this ETF Google Sheet, as well as our dividend payers, our puts ROIC Google Sheet, you can gain 24/7 access to all of those, as well as we have some new enhancements coming out that we'll talk about tomorrow for our Patreon members. And so you can get access to all those Google Sheets by joining our Patreon at the All Access or VIP level. Again, once we identify a trade idea, a strategy, something in the futures, like we saw those declines in sugar, a decline in oil, then if we're looking for an ETF to take advantage of that, or even some individual stocks, we have those in our ETF Google Sheet. So I've got some enhancements and some additions to cover to our ETF Google Sheet. So the first thing I did, we'll look at the sectors column as I added the FinBiz URL to the sector spider in the sector sheet. So let's look at that just quickly. So you can see we have a number of sheets within our Google Sheet, one of which is a sector tracker. So during the day, you can see which sectors they're rotating into and out of. So you can see the percent change, the volume, etc., highs and lows. And if they go red, green, you can sort this by the most positive or most negative. And I just wanted to be able to then, quickly see the chart for a particular sector. So, if we want to see energy, we can just click on that link now in the FinBiz URL column, and it will bring up the FinBiz profile for the XLE sector spider. So again, we can see the real-time action within that sector. We can see there's a bounce, so if we want to play that bounce in the chart, hopefully that will help, particularly if you're short-term trading, day trading, scalping, etc., these sector spiders or elements within those sectors. So that's the first enhancement. Also, I've added the following ETFs. I haven't seen the Crow. I saw Sydney Osborne. They were talking about this BITX, which is a 2x leveraged ETF on Bitcoin. So we'll take a look at that in a minute. So I've added that to the main ETF spreadsheet. So we saw that run up in Bitcoin. I think it's in the high 40Ks now. So if you want to play Bitcoin long, we have several other ETFs, but this is a leveraged ETF, and I think it's the only leveraged ETF. I was asking for if anyone knew of a leveraged ETF to short Bitcoin. I haven't heard, couldn't find a leveraged ETF to short Bitcoin. So if anyone knows of one, please let us know. Also, a theme, cybersecurity. So I listened to, I heard somebody talking about a couple cybersecurity ETFs. So we put these in the research tab. So we'll look at those as well in a second. Hack and iHack. So two different ETFs that you could play cybersecurity theme long. Then I also removed this Cocoa ETF, NIB. It's no longer active, so I took it out of our Google Sheet. And in the ETF database, currently showing no ETFs for Cocoa. So we'll keep an eye out to see if there's something that comes up that'll allow us to play that commodity in the future. So first I want to look at those cybersecurity ones. So here's these two cybersecurity ETFs, Hack and iHack. So I put them in the research tab to do a comparison between their risk reward profiles, so you could see, their range, support and resistance, etc. You can compare their composition by looking, clicking on the ETF database, link to their profiles, so you can see, more details about each of them, and then also their individual holdings. So you can compare, what they're holding. So you can see this got Zscaler, Splunk, Palo Alto, CrowdStrike, etc. So again, you can compare their compositions, their risk-reward profiles. As you can see, neither one of them really has a great short-term risk-reward profile. It doesn't meet our 2-to-1 criteria. So I'm not putting them in our main ETFs Google Sheet, but again, you can monitor their short-term risk-reward profile here in the research tab, and if that's something that you want to trade for going long cybersecurity, you can pick the one that meets your risk-reward profile, also the composition that you want to be able to play the cybersecurity theme. So this BITX, I believe I also added this to our main sheet. Yep. So you can see we have a number of ETFs that you can play Bitcoin up. So I added this BITX. So we can see it's got a pretty decent risk reward profile, 2.88, which is 52 week. So you can see that's a 2x leveraged. If you want to, again, see the composition of that, you can click on the ETF database. We can look at it in FinBiz very quickly. I don't think it hasn't been around for very long, only since July. So we see that big run up. So again, potential is optionable. Doesn't look like it pays any dividends. So again, another option. Looks like it's got a pretty nice risk reward profile to be able to play Bitcoin long. Again, you can play Bitcoin. This is BITI is short. So you can short Bitcoin, not leveraged, but you can short Bitcoin using BITI. Another option for longing Bitcoin is BITO. So we can see, the risk reward profile relative for each of those and track those. So I hope that helps. Okay, we talked about sugar. I want to look at that cane real quickly. You can see the risk reward profile of it. Again, not terribly attractive, still kind of more risk, so more downside in that ETF. So even though we saw that dramatic drop, it's still relatively high. Another thing I want to do is look at the technology component screeners. So in our screeners section, we've got this technology component screener. So I think this is interesting. We see ARK-K's been running up. It's still got some room to run. So we talked about, the potential for shorting ARK with SARK, SARK. So when it peaks out, makes a new or tests that previous high, I think there's an opportunity to short ARK-K using SARK. See Fang U is kind of, bouncing off that upper trend line. It is not really testing its previous high. Saw that run up in the biotech, so congratulations. I know Easy Mike and maybe the Crow were playing that run up. Seen some acquisitions. We also got approval for a CRISPR therapy. So CRISPR and Vertex got one of their CRISPR therapies approved. So pretty dramatic run up. You can short that peak with Lab D. I don't expect that to hold, except we might get more acquisitions. semiconductors, again, bouncing off that upper trend line. This is the one that we're looking to play. So this is the broad technology sector, TECL. We shorted that profitably using TECS. And again, you see it looks like it's bouncing off that high. It made a new high recently, and we're looking to, again, scalp short the broad technology sector using TECS. TQQQ, again, you can short with SQQQ. Again, they're all bouncing off their resistance levels. So again, different ways you can short those using the inverses, and you can find those also in our main Google sheet. Talked about oil. We saw that bounce in oil. We saw that steep decline. So you can short oil with drip or SCO. Gush started moving up again with that bounce off 70. Again, we went long using USOI, which is a dividend payer. So you can see if you want to play that bounce in oil. This is also another dividend payer. We can look at the dividend informations in our dividend payers tomorrow. Again, natural gas, you can long with oil, short with cold, or you can long with UNG or UNL, so you can see the relative risk reward profiles in those. So again, you can see ARC and SARC. You can track those there. We talked about Bitcoin. We also have some others for cryptocurrency in general. So we're currently long BLOK. We've been long for that for a while. So that's actually, it's more on blockchain than Bitcoin or cryptocurrency, but you can see another one, BITQ. So another way to play broader cryptocurrency. Talked about FANG-U and FANG-D. Talked about gold. So again, we'll see. Yesterday we talked about, we added this short on gold last week or the week before, GDXD, and I should have probably jumped on that one. We closed our position in GLDI, so we took profits in our position, monthly dividend payer we've held for a long time in gold, so we closed that. I probably should have jumped on GDXD, which is the short on gold, leverage short. So there's also dust, etc. So you can send that, the inverse of GDXD, the long versus GDXU. So once we get that bounce in gold, there's plenty of opportunities for, long and short. Also, the miners have been lagging. So there's, if the miners continue to trend upward but lagging, there's some potential both in the miner ETFs as well as individuals. Talked about natural gas and oil. As real estate's kind of mixed. Retail, again, trending up. We've talked about that. Again, the Russell, if you want to play that rotation in and out of the Russell, we've got URTY, SRTY. Talked about silver, long AGQ, short ZSL. We still have our monthly dividend payer, SLVO. Again, we saw that, volatility in the Russell. You can also play that with TNA or TZA. And then we talked about that opportunity with shorting technology broadly, which is TECS. Saw that bounce in the yen. So we had mentioned several times YCL or YCS if you want to play that trade in the yen. So if anyone else has a last minute ETF you want to look at, please throw that up in the chat. If I missed your question or ticker you want us to take a look at previously, please put that in the comments to this video. Or again, you can always contact us in our Discord. Our Discord's free to join. You can find an invite to our Discord in the description box below. We're BeachBum Trading, all lowercase, no dots or pounds or numbers. It looks like we've got one imposter to deal with after this ends. You can also find links to all of our social media accounts on the links section on our homepage, again, beachbumtrading.com. So you can always contact us via any of our social media sites. Again, if we missed your question or stock you want us to take a look at, if you want us to do research on one to look for additions to our ETF Google Sheet or any of our other Google Sheets or databases, please let us know. And also, we're always looking for your feedback as to how can we improve our weekly trading game plans, any of our videos, our tools, Google Sheets, automated systems, etc., to add more value for all of our fellow BeachBum traders. So please let us know, how can we add more value to you. Thank you to everyone that joined us in the chat today. We appreciate your participation. It's great to see you all helping each other out, sharing additional trade ideas, etc. We've got a great community here. If you're not already a member of our community, we hope you'll choose to subscribe. Join us in the Discord. We hope that you like this content. Please help us share this content with more of your fellow BeachBum traders around the world by smashing the like button, sharing it directly, share our content directly via the share button, etc. And let's continue to build our community, help each other out, help each other make money trading, succeed in your trading career. And we hope we'll see you back for part 2 of our weekly trading game plan for December 11th through December 15th, tomorrow, same time, same bat channel, 10 a.m. Eastern for part 2. We'll take all this data and select our top swing trading stocks to watch, stocks in our bullpen, in our shopping list, etc., more trade ideas and strategies. And also, hopefully, we'll have time to talk about some, I think, exciting enhancements to our community that you might benefit from. So hope to see you all again tomorrow. Thank you again for your participation, and have a great day.